Hello, and welcome to another update video about gold. Obviously, a lot of people interested at the moment in gold, a lot of people requesting regular updates, and I'm happy to provide them because at the moment it is certainly an interesting market with that strong sell-off that we have seen. The market hasn't done anything unexpected really so far, so the market is just simply doing what we outlined in recent months. If you watch any of the previous videos over the recent weeks, we were forecasting still another low here into the green support area. And we had an idea that this here could be a triangle. Elliott wave count projected here a triangle in an A, B, C, D, E structure, where the triangle was the B wave in a larger A, B, C structure. And the C wave is currently coming down. Want to share with you a couple of different wave counts here. In the end, they don't suggest at the moment that this low is already in. Yeah, I don't see any evidence it is. So the market can still go lower. I had a few questions if it is likely that we go down much lower. And yes, I mean, until we have a bottoming structure, it should still go lower. Okay, so if this is overall a bullish scenario or not, this is going to show as soon as we see a bottoming structure. Had a few questions about, could we make a completely new bear market low, basically, or a new low below the last year's lows? Of course. I mean, essentially, I'm tracking a bullish scenario because we had 5 waves down. 5 waves up. I can count this as a 5-wave move to the upside. The move down currently is a 3-wave move. And as long as we are holding above support, I'm going to track an overall bullish scenario. However, we use this scenario to track a bearish scenario as well, because below the 1719 level, we know that probably something much more bearish is at play here. So we're tracking with the support area a bearish scenario as well. You need to approach it from the mindset that we are simply tracking the trend at the moment. The trend is down. The C wave of this larger wave 2 hasn't given us any indication it has bottomed yet. I think we haven't even reached the ideal Fibonacci extension for this downside move, so we're going to take a look at that in a minute. Essentially, I would be strategically very careful with buying until we have a bottoming structure. Remember that I think throughout this entire move that started in July, we've been watching for bottoming structures, but we never called a low in place. And I will not call a low in place until we have a bottoming structure. What is a bottoming structure? A bottoming structure for me is that we see a small impulse to the upside, followed by a 3-wave corrective pullback, which is holding a higher low. And the first impulse should go above resistance. The first line of resistance is basically here 1862. I've just adjusted that slightly because the price made a slightly lower low. We always have to adjust it with the price that we know, okay, what is the 50% retracement level? If that level breaks, we have a first signal a low could be in, but it will depend on the context. Don't think this has to turn around in the box. I mean, these are typically just the Fib levels that we can be watching for a reaction. I'm not telling you it will stop here. We just use them to identify the relevant levels where we should see a reaction. And if we see a reaction, we can track if it is an impulse or not. And if we have 5 waves up above resistance, 3 waves down, and then we have our bottoming structure. For now, I remain focused on the downside, as I did over the recent weeks and months. And let's just track here the Fibonacci extensions for this C wave to the downside. And so again, this here was probably an Elliott wave triangle. If we measure against the Fib extension again, then it should take us, I mean, I think we talked about it yesterday. The ideal extension here would be 1782. We are definitely going to watch that. It can still go all the way down to 1719. Below that level, it's too low really for a wave 2 that's reliable. There is also another count where I would say that we possibly had the A wave here. This was the B wave. And now we're coming down in the C wave from there. So that this B wave didn't end as a triangle. Instead, it finished here. and this was not a triangle. Instead, it was just a larger wave 1, wave 2, okay? And then this is a 1, 2, 3, could get a 4 and a 5. And then, however, there is still another 4 and a 5 missing. So this is something I'm tracking in parallel. And that just shows there could be further downside, okay? So I gave you the relevant Fibonacci extensions. Essentially, I think we need to prepare for further downside here. I remain focused on lower. I'm not going to tell you we are going to turn around here. There is zero evidence that a low is in place. Absolutely nothing. Let's check what do we see? Yeah, the thing is, the price also made a completely lower low here on the daily RSI. So there are no bullish divergences left. Well, that's not necessarily a bad thing. I mean, going to the oversold, into the oversold region on the daily RSI, we did that here in September 22. I mean, if we now make a lower high and a lower low, and the RSI makes a higher low, that could be a nice bullish divergence that will prepare us for a potential turnaround. But, you know, this is still a potential, it has still potential for further lower prices. So another 6.5% certainly here on the table. That's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you are interested in stocks and shares and daily updates about the S&P 500, check out our stocks and shares service that we launched this week. You can find the links in the video description, takes you to Patreon, and there you can see the different tiers, which stocks are included and what we can offer. Because we had a lot of questions about the S&P 500 as well as regular updates on certain stocks and shares. Thanks a lot for watching. Bye-bye.